As the conflict escalated in the Middle East, some economists feared markets would panic and energy prices would spike. But so far, markets are lower but appear relatively steady, and oil prices have not spiked as much as they thought they were going to. Joining us now to discuss is former Trump White House economic advisor Steve Moore. Steve, good morning to you. We didn't see $90 or $100 a barrel of oil as predicted by some of these economists. So what are we looking at today with oil prices? And let's talk about why they were so wrong.
Well, the oil price has been very topsy-turvy since Saturday when the attack occurred, but they didn't rise, as you just said, to $90 to $100 a barrel. Although yesterday they went up a little bit. Last time I checked, we were about $75 a barrel, but you almost have to check every hour to see where those prices are, depending on what's happening with the situation in Iran and the attacks. But the big story here, Jan, to me, is that because of Trump's drill baby drill strategy, which has been in place now, well, in his first term and now in the first year of his second term, we're much less vulnerable to the Middle East and the craziness that's been happening there over the last 35 years. And that's a big deal. We're basically the single biggest producer of oil and gas now, according to the Energy Department, and that just cushions us from the blow. We're still, by the way, the world oil market is, the world supply versus the world demand. So if you get the disruption, it's going to cause prices to rise. I'm just saying that the OPEC countries and Iran and other countries don't have the blade at our neck as they used to.
We have a chart showing that, in fact, the U.S., as you mentioned, producing more oil than Russia and Saudi Arabia combined. Nearly as much natural gas as Russia, Iran, and China combined. Again, this is why American energy dominance changes the equation in a moment like this. This is why this is so important.
Yeah, no, absolutely right, John. And I would just add to what you just said. It's not, energy dominance is good for our economy, clearly, because then we don't have to import oil from other countries and we can produce jobs and the income here at home. But also now we're kind of recognizing that it's a huge national security issue as well, that we don't have to rely on a region that it has so much turmoil.
Yeah, investors also appear to be pretty calm about what's happening in the Middle East. What does the market's response tell you about confidence in the U.S. economy and really President Trump's strategy when it comes to Iran?
Yeah, as I said, that the market's been going up and down since the attacks happened, but we have not seen the big sell-off that sometimes we've seen after other events like 9/11. And so that's good news. And I think that the markets kind of anticipated that there might be some kind of a attack on Iran. And so far, I'm not a military expert, but so far it looks as though there's been real professionalism. The fact that
a lot of progress,
take out a lot of the bad actors in Iran is good for the people of Iran, but it's also good for global peace and prosperity.
Very quickly, a new analysis shows worker pay increased during President Trump's first term, fell sharply under Biden. If the Trump trend had continued, pay would be 4.6% higher today, nearly 5% higher. That is significant. So talk about, very quickly, what policies drove that difference and how quickly workers can maybe see some of those gains returned.
Yeah, I would say the two or three that are most important are the one is the deregulation that really took a lot of costs off the back of businesses, a lot of unnecessary costs. A second one would be, of course, the big, beautiful tax bill that's returning about $1,500 to $2,000 to families this year. That will make things more affordable. And I would say those are probably the two biggest factors. Also, the big key, of course, is we have a new Fed chairman coming in, Jan, in a few months. And if they can keep inflation under control, that's good for business, good for workers, because nobody suffers more from high inflation, as we saw under Biden, than workers, because their paychecks shrink.
And maybe they can bring some of those interest rates down even more. Former White House economic advisor Steve Moore, thanks for joining us. Have a good one.
Thank you, Jan.